Oil price has dropped more than 20% from a peak in January after the spreading virus affected demand from the world's largest importer. More in the following update.
Brent crude slipped 64 cents to $53.85 a barrel from $65, while U.S. West Texas Intermediate fell 47 cents to $49.87 a barrel from $54. America's production has moved that country from an importer of crude oil.
America has become the net exporter. Somebody who was supposed to consume in the market now is capable of exporting. And that means that we're going to have what we call supply gluts. So even in the absence of coronavirus, we had U.S. assuming the status of a net exporter, provided so much crude oil abundance in the market that we needed consumers to take care of it. What we believe is that consumers are going to determine the price of the market.
China's crude consumption is 15% of the global demand. The trade tension between the U.S. and China reduced China's consumption and helped put a cap on price. Coronavirus is sapping demand for oil with weaker Chinese demand for crude, which has fueled further concerns of excess supplies.
Supply is so much more than the demand. The coronavirus has put everything on standstill. The planes that fly in and out, they use fuel. Now, that quantum decrease in the amount of consumption by China has impacted the current prices that we have here. And what coronavirus has done is that it has drastically reduced China consumption because America no more consumes from the world basket. Closure of factories, economic activities has slightly gone down. And because of that, we have this too much drop in the oil price.
OPEC is still trying to forge an agreement on new output cuts to sap up an oil glut as traders wait to see if Russia would join other producers in seeking further output cuts.
There was a big political tension between Iranians and then the U.S. There was an attack in the OPEC de facto leader, Saudi Arabia, that knocked off about 50% of their total production. It was the killing of the Iranian general. That then did nothing to the market. So all these factors made the analysts believe that, no, something is fundamentally unique about this market currently, and it is that we have too much oil in the market.
OPEC and its allies are planning to cut production by a further 600,000 barrels per day to shore up prices.